Often in the media, we hear this characterization of fintech versus banks, but actually it's really an additive that the wave of financial technology, including the pure play fintech startups, pose great opportunities for banks to increase their distribution because there's still huge sectors of the economy that are not getting enough access to financial services.
Hi everyone, it's Julie Verhage-Greenberg here with your Tux Time podcast from Fintech Today, where we talk about all things fintech. In this episode, I am joined by Stripe's Matt Henderson. He is the business lead for the EMEA region. You guys have had a lot going on in 2021, and I'm excited to dive into some of the things that you guys have done, as well as the trends that you're seeing and things you're working on for 2022. So thanks for joining us. I'm excited for this, Matt.
Great. Thanks, Julie. And hi, everyone. I'm really excited about the new year. We've had a big 2021 already. Next year promises to be no less big. And I'm especially excited about some of the work that we're doing in the embedded finance area. So it's great. We're going to get a chance to speak about that now.
You know, everyone, especially those outside of fintech, sort of think of Stripe as just a payments company. And you guys have expanded so much even before 2021, but I feel like really a lot in 2021, launching new products and services that go beyond payments even. So let's dive into that a little bit.
Yeah. Well, it's useful to sort of think of Stripe in three different areas. We have payments capabilities. We also have software services. And many of our users, for example, will make use of things like Stripe Connect, which helps to provide hosted workflows for onboarding marketplace and platform sellers and managing payout schedules to them and that sort of thing. So we have multiple software products. We then also have financial services products. And you know, really, we started off doing embedded finance to the degree that payments is embedded, because we were providing payments as an API and as a toolkit for developers. And that's the same way that we're delivering our SaaS products and our financial services products. And so with the likes of Stripe Treasury, Stripe Capital, and issuing through Stripe, card issuing through Stripe, all of these products are products that are really aimed to be embedded within our customer's own service.
Yeah, and you know, embedded finance really took off in 2021. I mean, there were pieces of it that were happening before that, but it really became a term, became a thing in 2021. What sort of themes do you see happening there, both in your region as well as other parts of the world, since you guys are a global company?
Yeah, that's right. So I think last year, our announcement of working with Shopify and the way that Shopify Balance is leveraging Stripe Treasury to create money holding accounts for Shopify's users, I think that really helped to capture people's imagination about both why this sort of embedded finance product can be very impactful for users and the software platforms that are delivering them. And I think it helped to also prompt people's imagination about the sorts of use cases that they too could build. But in truth, you know, there's other products that, if you go back further, you know, many of the ways that our users are constructing different sorts of product experiences using things like card issuing. These things even predate that kind of embedded bank account type product. And I think part of the reason why it has become sort of in the zeitgeist, if you will, over this past year is simply that there's a lot of value to create. I think this is an area where small businesses in particular have much to gain from improvements that can be had with embedded finance products. They have not yet been served as well as they could from the traditional finance sector. And so I think that's part of the reason why this has captured so much attention.
Yeah, one other thing that you guys recently did, and I want to dive into with you just because I have less of a insight into what's going on in EMEA than the US and other areas that I tend to focus on, just given that that's where I am and there's so much going on here already. But Stripe Capital is something that you guys launched basically right before the pandemic. It was like September, October of 2019. What sort of data and trends have you seen in your region? Because as we mentioned in the pre-show, the UK is starting to go on a few more lockdowns. There's other things. Whereas the US, a lot of it feels very open at this point, which makes it so I would think entrepreneurs, their businesses are running more normally than having to close down.
Yeah, that's right. So of the three products, we have Stripe Issuing, commercial card issuing in Europe already. We haven't yet launched Stripe Capital or Stripe Treasury, but we're ambitious about extending all of our products across the world and bringing them to the EMEA region. We have, just in terms of how these things are doing, there's some really exciting news that we have around Stripe Capital is just the way that it's impacting businesses in the US. And so we have analyzed the businesses that have taken Stripe Capital loans over its journey so far in the US market. And actually, these businesses have on average grown their revenue 114% faster than the comparable businesses that haven't taken on the loans. And that's a huge difference, clearly, like more than double the business. And the reason is that these are small businesses that are using the money to choose to hire somebody for the first time, choose to increase their inventory beyond what was possible. And it's just opening up new opportunities for growth. We have examples of, there's one, Tiny Stoves, a business in Idaho that was able to move out of a tiny space for inventory and actually start to use a proper warehouse for the first time. And that then enabled them to substantially grow their business. And those sorts of stories, I think, are really kind of on mission for Stripe, because we want to increase the GDP of the internet. And actually, that mission, how better to serve it than through the aggregation of thousands and hopefully eventually millions of businesses who will have stories like that, who are able to grow through the use of some of these products.
The fascinating thing to me too is that someone might not even technically be a Stripe user and be able to get something like this. They might be a Shopify user and see the Capital product embedded in one of the offerings. So then, it really expands your reach quite a bit.
Oh, exactly. We talk with pride that we're an infrastructure company. And what that typically means is that the end user or consumer of the service, of the technology, will not be exposed to our brand at all, but is actually being served often by a software platform that they're interacting with. And one of the great opportunities with embedded finance is just the way that different sorts of software platforms, so you think of e-commerce hosting platforms like the Shopifys and Wix and WooCommerces of the world, and then you've got B2B SaaS companies that will often help small businesses to manage inventory, take orders, help to generate demand. And so these are sites like, you think of House Call Pro for plumbers and other tradespeople, Jobber, for example, another platform for tradespeople. And these sorts of software companies are often the ones that grow to have the best understanding of the businesses that they serve. And so where a plumber in the past may have had to have gone to a bank who's using a sort of a generic process to try to understand, should I loan this person money? And it's hard for them to understand how a one-person business is going to change when they become a two-person business. A platform like a Jobber or a House Call Pro can look at the plumber's reviews and know that they're legitimate and know that they're better than peers and know that can be translated to growth. And so there's a much more informed way when you're looking at it with some sort of industry-specific focus, and when you're informed by these new types of data. And so these software platforms are really more efficiently able to address different parts of the economy more efficiently than the traditional finance sector ever has in the past. And that stands to benefit for multiple parts of the economy. So, not only will it mean small businesses will be able to get loans that they would not have otherwise, it also means you've got a ton of interesting software businesses out there who can now have more things to sell to their users and more services to provide to their users. And to the traditional finance sector, it can often mean that that banks simply can actually now serve a greater part of the economy because loans that might have been inefficient for them to analyze and work out how to get distribution to are now being opened up by the combination of software platforms and infrastructure providers like Stripe.
When someone takes a loan from you guys via Stripe Capital, what other things do you do to make sure that, they are, as you mentioned, they typically grow a lot more than other companies of their size. So what other things are coming with that in order to make sure that they are thriving and using the money correctly and things like that? And I ask because oftentimes I know that you take like a portion of their monthly recurring revenue to pay back the loan. It's structured a little bit differently than what it might be if they took a loan elsewhere.
Yeah, so the main, I think a key criteria is that these are businesses that have a history with Stripe and Stripe's users. And so that helps to mean that we have a different sort of confidence about what their future will hold as well. And that's really the basis for how we're determining credit risk. Now, because Stripe and the platforms that are using Stripe then also are often the sources of the transaction and revenue generation for those end users, means that they the sort of the payment plan for the loan can be taken out of that revenue generation, and so that becomes a convenience factor, and is kind of one more reason why actually the software platform that's part of the revenue generation for the small business has a convenient way to be able to collect repayments for the loan.
Looking forward, what other things could you tie into that to make sure that the business is successful? Managing the loan, seeing if they should get a new loan, if they should pay back faster. Like, I don't know, it feels like you have so much data and everything on these companies that there's a lot more that you can do here.
Well, I think firstly, the control is really with the small business and what they want to do and what they determine is right for their business. It's amazing, of all of the businesses that have used Stripe Capital so far, only 5.5% of them had ever had a loan before. And so these are businesses that, they're really typically this is the first time they're using funds to help to expand their business, and we think that for many of them it'll be the first step in a pattern that actually there's a whole path of scaling this company that's going to become possible, and it might be that there's regular times of the year when loans can provide for example, the inventory pre-holiday season that helps them to reach new heights each holiday season of the year. But there's a myriad other reasons that they may keep scaling as well. So I do think that there's some products that are super high frequency. With things like loans, I think it's a bit more of a periodic decision for a small business about whether it's right for them or not. Now, part of your question is also about sort of what else and beyond that. So, there's already quite powerful use cases through this combination of the ability to hold funds, the ability to loan funds, and the ability to use card issuing as a way to sort of manage the spending of funds. And so we have, I'll give you an example from of the way our users are being creative in this. there's a business called A to B that provides essentially like logistics management software services for trucking, for trucking haulers, and they are able to use Stripe issuing to generate cards, spend cards for drivers that for things like fuel, other expenses that they're incurring en route. And the way that they're able to manage this process through a dashboard, control the issuance of specific cards, what the money can be spent on, how much can be spent on. There's a whole sort of set of rules that they can create in order to use this to manage expenses in a creative way. And for a business like A to B, what it's doing is enabling them to create a richer product experience for their customer who's managing a trucking business. And then the consumers of the service are often the drivers themselves. And so you get this sort of whole supply chain of people that are now using this combination of financial product and software product. And, it's often the sort of the first of its kind, that in the past they would have been scribbling on paper and using cash and so on. And so products like this are just really opening up efficiency and new possibilities in the market.
You guys have made the decision to work with banks quite closely on a lot of these things. Talk to me a little bit about that decision and how it's impacted how you've rolled out these new products.
Yeah, so Stripe, we partner with already over 50 banks worldwide, and we distribute funds in paying out routes to banks even in much greater numbers around the world. So Stripe's a company that has evolved to really help to bring together the fragmentation of the payments landscape and work with the existing operators in that landscape. And as we enter these new products, you see a similar sort of pattern happening. And so with Stripe Capital and with Stripe Treasury, we're partnering with banks like Goldman Sachs, like Barclays, and we're doing this to with Stripe Treasury, for example, to programmatically generate accounts that our platform users are providing to their customers. But ultimately, these are accounts that are held with these banks that we're partnering with. And so, in the same way that if you're a company that wants to really weave a product into your software, you need the service to have the equivalent of the elegant API and the strong documentation that Stripe's known for payments. It's very difficult for a company to bring all that together from the traditional finance sector. And so by working with a company like Stripe, we help to make the traditional finance sector feel as elegant and composable and developer-facing as we have done in payments. And we're doing this now with bank accounts and loans and card issuing and hopefully more in the future. And in that way, we really bring greater distribution to the banks. And so, often in the media, we hear this characterization of kind of fintech versus banks. But actually, it's really an additive that the wave of financial technology, including the pure play fintech startups, pose great opportunities for banks to increase their distribution, because there's still huge sectors of the economy that are not getting enough access to financial services.
The last time I spoke with you, you guys had just acquired Paystack, which was a Nigeria-based startup that does a lot of similar things that Stripe does in Africa. Talk to me a little bit about how that's going. I want an update. Yeah,
so it's been great working with the team at Paystack. They're super talented, moving fast. Since we last spoke, Paystack has launched in South Africa and Ghana, working on more countries to come. They're also starting to pilot an in-person payments product similar to Stripe Terminal, and they've grown their org a lot in the course of this sort of investment and expansion of their business. So there's still a ton of growth ahead for Paystack. They're already really having an impact on the internet economy in Africa. And as time goes on in the future, we'll be able to create more seamless transitions between Stripe service and Paystack service, which we think will be a great enabler for businesses in Africa selling around the world, and global businesses that really see opportunity to do business in Africa. So fintech in Africa in general is been a super theme of the last couple of years. So we'll see a lot of innovation come from the region.
Matt, thank you so much for joining us today. I really appreciate this. If anyone wants to stay up to date on what you and your team over in EMEA are doing, what's the best way for them to do that? I know you have a Twitter.
Yeah, well, you can follow me on Twitter. I'm on LinkedIn, Matt Henderson at Stripe. And, while you're at it, follow the Stripe Twitter account as well. It's hard for me to keep up. There's so many new features and things that are shipping every day that's a more reliable source than me.
One other reliable source, although we cover way more than just Stripe, would be going to fintechtoday.co, signing up for our newsletter, and you'll stay up to date on a lot of these things. Maybe not everything, because like Matt said, you guys are up to so much. I don't think I could fit it all in the newsletters. But I appreciate you taking time before the start of 2022, and let's chat again before it's been a year next time.
That would be great. That'd be great. Happy holidays.
Thank you. You too, Matt.